Welcome, everybody. Welcome to my channel, The Financial Trader's Mindset. In this video, I'm going to talk about how to think when the market draws down. What the psychology is of traders and investors and people in the market or even out of the market, how they think, and why is it that we just don't act when the opportunity is the best, right? Why do we tend to do the opposite? Why do we tend to run away from the markets when prices are going down? It's really funny. Like, say like a Black Friday sale. We see a Black Friday sale. We see items on sale for cheaper than normal price. And we tend to rush and try to pick up those items as cheap as we can get them. We negotiate with people when we're trying to buy something. We try to get them to lower their prices. We're always looking for that lower price, except when it comes to investing and buying assets, right? Well, particularly the stock market, right? Buying assets like, say, real estate, yeah, we try to get the lowest price we can. But in the stock market, for some reason, we love it when the market is at a high price and everybody's happy. And we hate it when when markets draw down or crashing, prices get cheaper. For some reason, our mind is like, oh, stay away, right? And I think it's just it's more so the volatility, the quick change in prices. It changes second by second, minute by minute, hour by hour, constantly. There's always a different price in assets, especially like a growth asset, like say Bitcoin, right? So, there's an argument to be made that before the ETF was approved, back before it was regulated, back in let's say 2017 even, when we just called this magical internet money. We didn't know if Bitcoin was going to be anything of significance, right? We had no idea. So it was very hard to hold on to it, to hodl. And people that have held through is that is something worth noting. So how can we change that behavior? How can we find and see the best opportunities when the risk is the lowest? Because risk is the lowest when prices are at the lowest, right? It makes logical sense. But most investors do not think this way. They think when prices are low, the asset is terrible. They do not want to own it. They just tend to capitulate, right? Or just not even get into the market at all. That's how the psychology of the herd, right? Or it's like a herd mentality. As they see other people running and fleeing for the hills, they tend to do the same thing. So how do we get around that? Well, let's first dissect what goes to the mind, say as the price draws down. What are people thinking? Well, let's start out from the top, right? We break new all-time highs. Everybody's euphoric. Everybody's happy, right? We all remember. Well, at that moment, if most people are happy and cheering and bullish and saying it's going to whatever number they picture in their heads, then it's most likely most people are already in that wanted to be in. There's a lack of buyers. Everybody's already in. So who else is left to buy? That's when any sign of or any whiff of bearishness can bring down that domino, that first domino, leading to bearishness, leading to a bearish trend. It could be anything. And when that happens, cracks start to form. People start wondering, wait, especially those that bought the top. Wait, did I just buy the top? Why is the price going down? What should I do? That's what goes to the mind, right? It's like, okay, price drew down. It's holding, say in this case with Bitcoin, it's kind of holding this 102K. We're still above 100K. Everything is good. It should pop back up. But then no, it breaks a new low. Oh shit. People start getting out. Either A, people that got in low and are taking profits, or B, people that bought the top and are quick to cut their losses. And then that starts, right? Then you get a little bit of equilibrium where the market is figuring it out, right? You got the battle here, the bulls and the bears. Where is the price going to go? Then you get the drop, the big drop. Day 1, day 2, day 3. Holy shit. People are once this breaks, it's okay, time to stop out. Stops getting triggered. people panicking, get me out at any price possible. This is going to zero. And within a few days, we go from 100K down to the mid 70s in a blink of an eye. Money's disappearing before your eyes. And people just panic, right? It's like you see that red on the screen, makes you panic. I think it's all by design. Like, look, there's red on the screen right now. You can see it right here on the watch list. You see red, you're like, oh man, it just gives you that feeling of shit. Is this going to crash? Is this going to go down? I think it's by design, right? Because the markets are a mechanism to extract money out of people that are impatient, that don't have a plan, that FOMO in, that have greed, that are fearful. It's designed to take money from them. People with a scarcity mindset, and give it to those that have the opposite, a mindset of abundance. They don't care where price is going. They have conviction in their investment. They know what they're investing in. They have a plan. They get stopped out, it's okay. They're following their plan though. Even if they're long-term investors, it applies to any type of investor or trader. That's where the money funnels to. And eventually, as the scarcity mindset investor, over time, if you stay and stick with it long enough, and if you're stubborn and persistent enough in the markets, eventually you realize that you need to have an abundance mindset. You need to have a plan. You need to be able to follow the plan and understand that you have no control over the outcome. It is what it is, right? Whether you make profits or you take a loss, doesn't matter. You just understand. And when you realize that, that's when the profits come. You kind of have to have a kind of a disregard for the money. Like you can't, it was more so like, dare I say, like, you don't care if you lose the money. Like you just have no care in the world what happens to the money. Your P&L is fluctuating. You just don't give a shit. Goes up, it goes down, goes up, goes down. You just get numb to it over time. I think that just comes with experience and time. It really does. And the problem with a lot of investors, or even just most likely new investors, new traders, they're so emotionally attached to that money because they've worked hard for it, right? They feel like if I take this money and I lose it, that could be months of work gone down the drain, especially if they have no plan, no risk management, right? I've been there, right? I've been there where I've worked months on end saving up for a trading account only to blow it within a few days, right? In my early days of trading. I remember those days. Those are the most heartbreaking trades. And the losses then compared to like what my portfolio swings at now, it's like night and day, right? Like that loss is like means nothing today to me. But back then it had such a profound impact. I still remember that because the emotional impact it had on me when I lost that money, because I was like, holy shit. I just worked months for this money to save it up, made a lot of sacrifices, and then I lost it in the market. It is demoralizing, right? And back then I had a scarcity mindset, not abundance. Like, oh, here's my plan. Let me follow it, right? It's more like I see losses on the screen and it's like, holy shit. And then those losses turn from small losses to big losses to large losses to blowing up accounts. And you realize you sit there like, what did I just do? But when you're in the heat of it, it's like, oh my God, what is going on? And then you start blaming the market. The market is after you. The market's there to take your money. Every time you put on a trade, it somehow knows that you put on the trade, so it's going to do the opposite of what you want it to do. Right? We all, we've all been there and felt that. So how do we stop that? How do we go from the scarcity mindset to the abundance? How do we have a total disregard for the money? That's very hard. It's not something that you can just learn in one day. It's something that you have to strive for. You have to almost want to not care about the money. And it really comes down to having no need for the money if you lose it, right? Which means you have to have some other income coming in, or you just have enough saved up to where if you take losses, it doesn't matter, right? I mean, yes, they will still sting. You will still take a loss and you'll just be upset, right? It happens. But it's not like if you lose a trade, you're not going to be able to pay rent. You're not going to be able to pay your bills, right? That's what I'm talking about. That's where it becomes a problem, because trading is already hard enough. investing is already hard enough. So if you're looking at it as like, well, I am trading with money that I cannot afford to lose. I'm going to tell you this right now. You got to stop. You cannot trade. It's just, I've been trading for almost 20 years now. And I'll tell you this firsthand. If you're in that situation where if you're trading with rent money, you're trading and you have credit card debt, you're trading and you have bills to pay, you're just in student loan debt, right? Stop trading. You should just take the money, and you're better off paying off your bills. You're paying down your debt, getting rid of your debt, increasing your income, improving your skills, invest in yourself, get education, right? Because when you get skills, you can move up in your career, earn more money, save more in result of that. And then eventually you'll get to a point where you're at a better position to invest and trade the market if you want to. So how should we think during a market crash? Or just a drawdown? It doesn't even have to be a crash, right? Like, how do we take advantage of this opportunity down here and buy more and not be afraid? Well, it comes down to experience and repetition of exposure to that experience. And then realizing that the cycles just play over and over again. Like I said, I've been trading 20 years and I see it over and over again, right? You see where people get extremely fearful down here. People didn't even want to touch or buy Bitcoin down here. And it's reflected in the price, right? You see it in the price because price is low, right? From the highs. People got rid of it. People didn't want in. People started getting bearish down here. Remember when people were euphoric up here? The opposite happens down here. Everyone's bearish. Everyone's saying the market's going to crash. Bitcoin's going to crash. That's it. That's the end of the bull cycle. We're going to zero, right? But that's the point where, remember where there was, everyone had bought up here and there's no more buyers? Well, the opposite happens down here. No more sellers. Nobody left to sell the market. So what happens? It's all about supply and demand. Up here, you have so much supply, no more demand. And then that supply increases, you know, and the demand is still not there to counter that supply. That's simply what it is. So then you have like the knife catchers. First you get knife catchers that just want to just buy every dip, right? Well, they're buying the dip from the people that are panicking. But then if prices keep going lower, then they become the panickers, right? So they just take the shares they just bought and then they dump them lower. It's like they buy them and then dump them lower. And that just repeats, right? More knife catchers come in to buy from the higher knife catchers, right? Here's a knife. Here's the knife, man. I don't want it anymore. Here's the knife. I don't want it. And they just pass on that knife, right? And eventually prices get so low, people then realize, right? Logic starts to set in. It's like, well, we just came from 110,000 almost down to the 70s, right? I think this is fair market value, right? People, it's that herd mentality, right? People start thinking that, oh, it's kind of fair market value. I don't mind holding some for the long term, whatever it is. They start thinking that. So then maybe as the knife catchers start buying down here, maybe as they capitulate, they don't capitulate everything. They're like, well, it didn't work out. Let me just sell half of it. I'll keep half. And then eventually it's like, well, it didn't work out. Instead of selling half, I'll sell a quarter of my position because I think this is a good value here long term. And then eventually it gets to a point where, you know, you bounce and you get down here and it's like, people are like, this is a good buy. I'm staying in. Right? And they don't capitulate. And then the market starts to turn, right? The demand begins to grow. Then you get momentum. People see that, oh, wow, okay, price held here. Some people would rather pay higher prices as they're paying for the info that, okay, the trend has changed. It's no longer just going to zero. We're getting a reversal in the market. And then you get this momentum move. And then up here, or wherever the top of this run will be, I think it's getting kind of overextended right now. You get the people that had the mentality to dump down here after buying up here, they FOMO back in, right? And that's how the market works. Price is kind of like the game Pong, right? You have the ball the two rackets, right? Or just, the two rackets that hit the ball, right? And then they're protecting the bricks, right? The ball is just hitting the bricks. The ball is the price in the market. The ball is the price. The price is going to be wherever it just goes, right? The bricks are the buy side and sell side liquidity. Now, the goal of the buy side liquidity is to get price to break through the sell side and get, hit the goal, right? Get to the other side, higher prices. The goal of sell side liquidity is to, prevent the ball from going higher and go lower in price, right? That's their goal. Price just ping pongs around, hitting the bricks, and whichever liquidity is deeper, bigger bricks, more dense, right? It's just more resistance for that ball to get through. And we all know through science, things like to flow through the least path of resistance. So you see here, it has nothing to do with where you think price should be, your emotions. Why is the market falling? Why is this? Why is it going down so low? Why is it this? Why is it that? Ethereum's a good example of that. More extreme. Over 50% drew down, right? That's a big drop. 65% from the top. It's a huge drawdown, right, to go through, right? Lots of knife catchers capitulating, right? Over and over and over. People trying to find the bottom. Eventually, they found the bottom, right? I don't know if this is the bottom. I don't know that. But that's all dependent on the liquidity, right? Buy side and sell side liquidity. Price is ping-ponging 24/7, 365 in between those bricks. Breaking the bricks one by one on each bounce. Whichever is more denser, whichever regenerates more liquidity or more bricks becomes the victor, right? And allows price to keep going higher or go lower. So when you look at price in the future and you look at charts and you think about the market, it's good to think of it in that way. It's like, we don't know where price is going to go. Technical analysis, the lines, whatever, doesn't matter. Technical analysis doesn't really matter at all, right? It can be a guideline and it could help you to define some risk because that's simply where most people are looking at, right? People see a resistance level, say like 3K, everybody's looking at that level. There's probably a lot of sell side liquidity up there because people are trying to front run and get out or short the market at that point. So there's going to be a lot of resistance up there, a lot of liquidity, a lot of bricks for that ball to just blast through. That's all it is. But, okay, so yeah, TA can work in that manner. But all it takes is someone with deep pockets and just blow out all that liquidity. See, F you, motherfucker. They might have a big bag of Ethereum at lower prices. They're like, I want this to go to 4K. That's all they got to do is just buy up all the liquidity there. And it's very possible. It happens all the time. So in that sense, TA doesn't mean shit. Doesn't mean shit at all. But you can use it to define risk, but just don't use it as gospel. So it's very important to think of the market that way. We have no control over it. It's all based on buy side and sell side liquidity. Nobody knows where it's going to go. If you see people posting like, oh, I told you so. I knew it was going to do this. I knew price was going to do that. They don't fucking know. So where's the edge here? The edge goes back to the beginning of the video of how people think. When things get extreme, whether it's on the upside, when it's euphoric and this thing is going to the moon and everybody's happy. Everyone's posting screenshots of their P&L. People telling you to buy. People telling you it's never going under 100K again, right? On Bitcoin. You realize, okay, maybe things are getting a little too heated up here. Either A, I'm not buying any, or B, maybe I'll sell some to pay myself a reward for buying lower. And then the opposite happens down here. People bearish, people just absolutely snarling at anyone that's remotely bullish. Banging you on the head, like, say, why are you bullish? This thing is ugly, it's going to zero, right? You're like, well, this thing drew down pretty far. Yeah, it could go lower. Maybe I'll buy a little bit here. That's the idea. This is actually the lowest risk. Risk gets lower as price goes lower. Up here, it is the riskiest time to buy. Least risky down here. You can even use leverage down here and keep a tight stop, right? So, video's getting a little long, but I just wanted to really just kind of have you see the mindset of how people think in the markets. Use that sentiment to your advantage. We have the tools nowadays. It's just social media like Twitter or X, right? You just go on X, see how people are posting, what people are saying, what people are just doing. I just see that. I'm like, when it was super bearish, I was buying I bought a lot of IBIT down here. I bought a lot of Ethereum. My last buy on Ethereum was in the 1400s. Yeah, down here, pretty much near the bottom. I didn't get 1300s, but I got 1480s. I was buying from 3,500 all the way down, bought really aggressive under 2K, and I started leveraging up down here. Just, people were bearish. People were asking me, why are you buying? Why are you so bullish on Ethereum? I was like, it's just very low risk. It's a low risk entry. I mean, yeah, we could still fall down lower, but we've been trending down for months. People shouting on the top of their lungs, everything's bearish. I think it's a good bet. I think it was a good bet to lever up. So, but I want to leave you guys with that, right? We don't know what the market's going to do. Don't expect to think or try to figure it out where the market's going to go, where price is going to go. We don't know. So, just want to leave you with that, right? That's why I use concentrated liquidity with crypto. It allows you to stay in the market and get paid in yield while the market does its thing. And you just position yourself in a way where you can buy at a frequency that you want while at the same time selling at a frequency that you want. Using your ranges, right? Using your liquidity pool ranges. And the whole time you're earning yield day in, day out, 365. Just like I have here, right? Like I got this LP right here. There it goes. So this one's been running for, I think, about 5 days, right? If it wants to load up, there it goes. 5 days. You know, I set my ranges, 1800. Zoom in a little bit. 1800 to 3505. Buying at a frequency that I want. I set up my liquidity the way I want it, right? Right now it's 50-50. And then I sell it at a frequency I want at higher prices. The whole time earning yield while I wait. I don't care if it takes a week to get over 3K or if it takes a couple years. Either way, I'm still getting paid in the meantime. That's the beauty of it. If you're interested in knowing how to learn about concentrated liquidity, how to earn money on your crypto, to compound your returns and just grow your account without having to put fresh capital in. Understanding the mechanics of how to use concentrated liquidity like Uniswap. Join my Discord below. I have a link below. You join for free, ask questions. And, that's it, join up, come on in, and I'll be happy to answer any questions you have, right? So thank you for watching this video. I know it's a bit of a long one. Take care. Remember, it's all about abundance and having a plan. All right, take care. Peace.